Okay. Hello, everyone. This is Giselle Aquila Rogers. How are you? I am your real estate agent covering for the National Association, affiliated actually with the National Association of Realtors, and I will be your watchdog for 2023. Okay. I'm actually coming on today because I've been doing a lot of, since the last video, commercial deals. So that's the reason why you haven't seen me recently. But I just wanted to come on because I got a report on, actually, I think it was 2 days ago on Friday. And I saw that the interest rates actually went up, and I didn't really like some of the reportings that I got conference in on with NAR. So, as some of you may know, if not, then now you're going to know mortgage rates continued a steep climb, and it surged closer to 7%, forcing more would-be home buyers back to the sidelines. Okay, so that was not good news, I think. And that was a sharp uptick that has squeezed a lot of home buyers that were looking forward to, last year around this time, that 3% interest rate that was so enticing. And they were sitting there doing multiple bidding wars and fighting for these homes and waiving appraisals and waiving inspections and waiving the cat, the dog, the mother, the just everything, just waiving everything and doing bidding wars, like I said. Now they're just sitting on the fence. The interest rates are high, and of course the home prices have basically went up. And to make matters worse, as you guys know, the housing inventory is still low. You would think that because the interest rate is at 7%, we would have more inventory, right? And this is nationwide. I'm in Florida. I'm actually in South Florida. And I specialize in all of Florida, actually, but a lot of my closings and also commercial deals is South Florida. But you would think that it would still make up for like a lot of, I'm going to talk right now about residential, okay, and not so much commercial. But you would think that a lot of housing inventory would be available. But what's happening is, a lot of increasing population, different places. People aren't just coming to Florida. A lot of people are going to other hot hitting cities. You can just Google top 10 cities that people are moving to. I don't have to tell you, okay? But they're continually with. And so here's the reason why, even though the interest rate is high, you would think there'd be more inventory. But with the increasing population, you have, of course, the pandemic, you know, then you have sky high materials that has the cost of those materials. And then you have a labor shortage, okay? And then you have supply chain issues. And of course, that came from the pandemic and all that other stuff. And then what has contributed to the current housing shortage is the inventory has not quite caught up with all of the pandemic and the the natural disasters of a lot of people coming down. Then you have a lot of people that they're renting. Um, because there isn't a lot of people. Look, you have sellers. I've actually reached out to a lot of my sellers, and I'm like, hey, I have buyers, they want to sell, or whatnot. But they're like, okay, if I sell, where am I going to go? A lot of them don't necessarily want to downsize, and they are locked in at a 3% interest rate, some of them. They probably brought in 2000. It doesn't even matter, as long as last year was 3%. So if they brought in 2015, 2010, 2000, whatever, anything 2000 last year could have been 3%. So if they brought any time before last year, they got a good interest rate, even if it's 5% or 4% or whatever. If they sell right now and purchase something, they're going to be closing at 7%. Who's going to sell right now as a seller, okay, and close at 7%? So they want to sit and stay inside of their house. So they're not going to want to sell right now. So that is also an issue, just trying to find inventory, okay? And you have, like I said before, with the builders, the just like a townhouse right now, $600,000. Okay. And of course, I'm sure because of the sky high materials and cost of labor shortage and the current housing shortage, and, with everything. So, and then the 7%, and we're not going to even add the taxes are high, and, which of course the mortgage insurance. So the cost of a loan, you know, is very expensive. And even though, people may argue, well, um, salaries supposedly, I want to say quote unquote, has went up, but the cost of living has went up. The cost of food has went up. The cost of fuel has went up. The cost of taxes and everything has went up. And it hasn't really, if you want to be honest, it hasn't went up at the rate of the cost of living. You know what I mean? So the cost of living has outpaced the cost of any salary or any salary increases. So it's off balance. So it's not really a true rebound from the pandemic lows, from before 2019 and everything that has happened. So because of that, would-be sellers are pretty much opting out of the housing market. So that is still keeping less inventory on the market. You know what I mean? So they don't want to actually have to be in that, in a rush to sell. They're not in a rush to sell. Okay. So we have that, and those, as I said earlier, COVID related materials and labor delays have also stalled several construction projects. I know, for, I won't say the builder's name, a few builders' name, but they were stalled with getting some of their permits signed off on and getting some of their supplies, back through the pipeline. And I guess now we're starting to see some home builders start to pull back sharply on some of their new constructions, that was in the pipelines. So honestly, there may be less competition in 2023 for the houses on the market, and inventory will likely continue to be tight. So there you go. You have rising interest rates that could bring more foreclosures in 2023. Okay. And there's already been an uptick this year for foreclosures. Um, and and there are projections I've heard on MSN about the expired, basically they're not letting people know, but a lot of people have started to default on some of these loans that were given at even the interest rate at 5%, and this is like, I'm talking about like within the past 1 or 2 years, people are already starting, just because taxes are high. Like I said earlier, the mortgage insurance is high. Everything is high. Let me know your experiences in the comments section. And a lot of people are having buyer's regret about, just, I guess, that rush to buy something. But now everything is just they're feeling the squeeze of everything. So the housing inventory, um, unfortunately, a lot of people would just end up defaulting on the mortgages, and it's not guaranteed that what they paid for it, once they start defaulting, it could be a short sale. It may not be worth what the value of putting it on the market. They may still owe more than what the value is right now because they paid so much for the house. You know what I mean? Especially with the builders, so, especially new construction. My goodness, a single family, 800, 900,000. You know what I mean? If you default on that and you get behind on that, sometimes it takes a year or two, and before it actually gets through the loss mitigation and all that other stuff, and the asset management and all that other stuff, and you owe an extra 100 or 200. It just gets crazy, and you're over a million. It's a short sell. We don't want to go back to 2007, 2008. You don't even want me to break that down. And it just gets kind of crazy. And so, anyways, but so even though this is the issue, we're having problems with overall inventory issues. Okay, so the next question is, will it be a buyer's or a seller's market? Okay, so a lot of people are asking this question, and you know what? This is a question that's near and dear to me. I had this question with a colleague of mine. Like I was saying, I have a colleague that you know he would say that in the backdrop in the media, because let's face it, we're hearing inside the media that a lot of noise about, like, okay, there is a recession, and we're seeing some layoffs, specifically more inside of the tech area. You may see some of it. Also, a lot of people are seeing the stock prices, especially like if you work for a company, you can look at your stock prices, or 401ks or different stuff or whatever. They may be at an all-time low. Various well-performing stocks, you may be wondering what's going on. So I think it is a complicated question. I don't think so, but let me tell you what my colleague actually said. Okay, he said it depends on how you look at it. If it's the housing market or without the housing market, if it's the fuel or without the fuel, if it's with food increases or without the food increases. So he wanted to decompartmentalize it, you know what I'm saying? And not just say recession as a whole economy, recession as the whole of America. You know what I mean? Different people within these industries will give you a yes, recession, and someone else inside the fuel or another industry will say, no, we're not in a recession, because guess what, they're doing great. It's the fuel prices, whatever is doing great. And think generally, what I guess he was saying that they think that there's just too many job openings in the country, so it seems that there's going to continue to have a number, and it will eventually probably lead into a recession, is basically the mindset that I'm trying to streamline what was said between us. But although it might be, which you'll hear on TV, and even with the feds, they'll say it's a soft recession, which is what the feds is calling it, as a soft one, probably toward the last quarter of 2023. So you guys hear it here first if you didn't hear it from them. They're pretty much referring to it as a soft recession. Then that then really opens up the question, what's going to continue to happen with the interest rates. um, um, I think what's coming, albeit a soft recession, I think that that's on everybody's mind. I honestly think, first off, I think the sellers are starting to realize that what we saw last year around this time may not come back anytime soon, especially at that type of momentum. We're not going to see that. Those people fighting, waiting in line. One moment, please, I'll be right with you. One moment, please, I'll be right with you. And you signing and having all. I don't think we're going to see that anytime in 2023, 2024, probably not even 2024. Not with these interest rates, not with the supply, plummeting, and inventory being not available the way it is. And even right now, I mean, even a lot of people, builders can't even finish building what they can't even finish building half the stuff because half the supply is not even there. So this is just not that. So again, like I said, they're realizing that it's a long haul. Okay. And that asset called a home is it's a great value, but they're slowly but surely eventually perhaps may jump off the fence, but those rates have to go down, and it's not going to be I don't think 2023. And I do foresee 8% interest rate in the future. And I think the only people that like, and you know what the sad part is, not to be jumping all over the place, but like I've had people that's like, okay, I'm ready, because a lot of people I've heard of rental increases of anywhere from like 500 to like 700, even up to like $1,000 annual rent increases. So that alone will make you jump off the fence and bite that maybe 7% rate bullet is what I would probably refer to it as, and probably want to purchase. But I mean, 7%, my God, you know what? That can, if you purchase 7%, so like 5%, 6%, sorry, was January, February was 7%. Just that 1% interest increase can add an additional $800 or so, you know what I mean, to your interest, to your mortgage, and then a little bit more mortgage insurance. So it's really a tight situation to be in, um, for a buyer. I wouldn't say it's a buyer's market, but I really wouldn't say so. That was me. I wouldn't say it's a buyer's market, but I really wouldn't fully say it's a seller's market. I would say it's kind of because a buyer's market is like, okay, you can completely get the price you really want. You can offer way much lower than 5 to 10% less, and you can just get all the perks that you want. But then it's not really a seller's market, because you still sitting with homes on the market because it's at 7%. So right now nobody's winning, right? So 7% is causing some houses to still sit on the market, but then it's not fully a buyer's market, because the not just, of course, obviously still the interest rate issue, but then also you have the contingency of not a lot of inventory. Using the buyer's market, you have like 4 houses, like 2 blocks apart, like maybe 4 houses on one block or 2 blocks apart. You have many houses, like maybe 10 houses inside of a community that you can pick from, and you can just compete with this house versus that house, and you can compare, and you can kind of like say, well, I'm going to pick that house over that house, and you can kind of low bid. You don't have that. Buyer's market, you have a lot of inventory. We do not have a lot of inventory. So how are you going to call this a buyer's market? right? And then you can't really call it a seller's market because houses aren't flying off the market. You know what I mean? You don't have bidding wars. You don't have sellers just like, just throwing stuff like last year. People were just lined up in front. So I honestly would say it's kind of been equalized because for the sellers, really because the feds put the interest rate at 7%. So the buyers are sitting there on the fence and maybe even been priced out because the higher they put the interest rate, the lower the loan amount of affordability that they can afford, if you understand, and you can get like go on Google and put like a mortgage calculator in and put in 400,000, put 4% interest rate, and then put in 400, and it shows you how much you can purchase, and then put the same 400,000, and then put 7% in, and then it show you a different, mortgage amount and how much you can afford. It go, you know what I mean? Your mortgage payment changes of what you can afford. You know what I mean? Play around with that calculator and you'll see if you're not, kind of new to the market, you'll see what I'm saying. It makes a big difference. So I honestly fundamentally would say the answer is it's not a buyer's market, but it's neither a seller's market. So there you have it. Again, circling back around to my friend that we were debating about if it's a recession, and they were saying it depends if it's a fuel or not or whatever. I, as a agent that has been in this market, I don't know, maybe 18 years, I don't know. I think it's a recession. I think it is a recession. I think they're not saying it. I think when you have, even if they want to refer to it as a soft recession, I don't care what they want to call it. I think it's a recession. They're just not saying it. They don't want to scare people right now. I think when you have, inflation, high food costs, you have people defaulting on their loans. They're not really saying as much, they're not letting that information internally out. But they are. Just wait, just wait, just wait. I promise you, just wait. Just wait, guys. You just wait for it. You just wait. 2024, maybe 25. You just wait. It takes a while to go through the pipeline, to go through the less pendants, to go through, it takes about maybe 6 months of missed payments. And then, eventually they have to file. And then maybe they don't want to file right away. Like, who knows with all the, I don't want to say propaganda, but all this other stuff. Maybe it takes a year, you know what I'm saying, for them to really go through. Maybe they'll do a loan modification. Who knows? But you just wait for it. There's no way these people can afford a $800,000 house that should have been $400,000 and closed at 6%, 7%, 8%, whatever. Eventually, interest rate, high taxes, high mortgage insurance. You know, probably, I don't even know if they put down 3.5 or 5% interest rates, and the economy is not stable, and high food prices, inflation, and no real stability. And we're not going to talk about the people who have gotten sick, who's lost their jobs, who can't afford to pay certain things anymore, who don't even qualify for certain things. You know what I mean? This is not a healthy economy, you know what I mean? So we're not in a good space right now. We're not in a financially healthy economy right now. So if you can wait it out, I tell some of my clients, wait it out if you can. I know some people, they may have circumstances where they have, they have to, rent keeps going up, you know what I mean? And they have circumstances where their family's growing, and there's other, variables. I don't want to go through A through Z, but then okay, fine. But if you can wait this out, and maybe you can be able to snatch a really good foreclosure, guys, maybe in 2024, maybe in 2025, you can really snatch something that's really good, and you'll be one of the good ones that like some of my clients that did really good in 2000. They waited and they got like really good deals in 2011. When the recession of 2008 hit in 2009, they were able to just wait it out in 2009, and they weren't just investors. They actually were able to wait out in 2011. Those of you maybe you want to fix your credit, this is a great time to fix your credit and get certain things ironed out. It's a shame that sometimes people can't like live together as families and just try to wait out certain things, fix your credit, save up. And when those foreclosures and or short sales come on the market, and you could probably, what, maybe you can get these houses for half the price if you just wait, and not be one of the ones with messed up credit because you imploded, you couldn't um um the market, we don't know what's going to happen with the economy and job stability and all these things, and food prices and everything that's going up. So that's just my professional advice. I would tell people if you could just wait like maybe even a year or two, but then that's on so long. But guess what? 2019, the pandemic, that was literally like 3-4 years ago. You know what I mean? Like we're in 2023 right now. Hello. So that's nothing. Just keep yourself busy, save your money, or trying to eat out and do all this other stuff. I know it sounds easier said than done, but work on your credit, and just try to and maybe you can get a really good deal, you know. You'll be surprised some of the stuff that you can get later on, and you'll be one of the good ones with the good credit, and prices come down, and you'll be ready and good to go, and perhaps be able. It's better to be in a better good position if the market comes crashing down, and then you can afford to get something, and you're not like screaming help, help, help. And you can actually be one of the ones that benefits and be like, you know what, I listened to Giselle, I actually got something. And I have some good testimonial clients, I should say, that actually did real good in 2011 because they did wait. So let's see. So I hope this helps. Put in the comments any questions that you may have, any experiences that you may have, and what's your take? Do you think we're in a recession? Do you think we're not in a recession? Do you disagree? Do you agree? Do you not agree? And has your rent went up? Are you looking to buy? Or are you one of the buyers that were going to buy, but then the interest rate went up and then you canceled your contract? We have a lot of those that 7%, whatever, they were like, I'm out of here, I'm canceling contracts, and they're like, nope, not gonna do it. So let me know. I am very interested to find out. Thank you so much for hanging with me this long, and I appreciate you. Please subscribe and like and comment in the video. All right, I will have more videos for you guys, and this is market research and watch. I will be your market watchdog for 2023 and beyond. Love you guys. Thanks for hanging with me. Peace, love, mwah. Talk to you later. Bye.